All right, so you guys continue to ask us to do deeper dives into some of the biggest projects in blockchain. Of course, Avalanche is, I think, one that is probably the most popular, at least from our audience. So we decided, hey, let's do it justice, and let's get John Wu back on the show, and it's going to be a good one. You don't want to miss this one today. My name is Paul Barron. Welcome back into Tech Path. Of course, joining me is Mr. John Wu, president of Avalanche. Great to have you back, John.
Paul, always enjoy speaking with you. You're one of those people that has lived through Web 2 and now you're experiencing Web 3 all at the same time, so you have great perspective.
Yeah, it's a good one. Oh, and you know, the interesting thing is just the amount of innovation and the speed in which all this stuff is happening. Obviously, Avalanche is doing a lot in that direction. So we've kind of taken this interview and broke it down into a few categories for our audience so they can kind of keep up. We'll start off with tokenized assets in general. And I want to kind of go over into that. Obviously, with Avalanche, you guys have done a ton of activity recently. We'll get into all that news here in a moment. But I want to lead off with a little bit of a counterstrike. And this is from the guys over at VanEck. I want to cut to a clip for you. Listen in.
These tokenized real-world assets are going nowhere for the meantime. They're just adding additional cost and complexity. You know, the yields that you can get on an on-chain T-bill are less than what you can get in an actual T-bill. It's just not a very interesting product right now, neither for the issuer nor for the buyer. Bitcoin has to 10x in order for these to become interesting, right?
What are your thoughts on that statement? Just want to kind of get your feedback.
Well, first of all, I know Matt. Matt is a very smart investor, and the operative word is investor. VanEck is an investment house that's been around. They're always on the cutting edge of new emerging technology and creating great ETFs and products around new emerging technology. So very smart guys over there. But he is looking at this from the view of an investor. At Avalanche, we're operators. So we're the ones actually working with the enterprises, working with the, call it traditional finance, and creating the technology that will ultimately change the way financial services work and other industries. And tokenizing real world assets is actually happening. Now it's going through stages from an operator's perspective as opposed to investment perspective. From an operator's perspective, what we saw in 2000, call it 19 and 20, the enterprises of Web 2 and traditional finance firms were really just trying to explore on a meta level, what are the benefits of permissionless and blockchain technology? Later on in the cycle, call it maybe by 2022, they are actually in the technology and understand the benefits of the technology and applying the technology. What we're seeing now in this next phase, real business use cases and looking for solutions to optimize existing business problems. That's what traditional finance is doing, and they're doing through tokenization and creating real world assets associated with it. By the benefits of this is actual real cost savings. They're seeing over $1 trillion per month of tokenized repos settle, and that is saving both those banks a lot of money, millions and millions of dollars.
Yeah, for sure.
We're also seeing tokenized assets in other areas, not just in finance, in loyalty points, and we can go into that later. So there is real business use cases, and traditional partners, whether it's Web 2 enterprises or traditional finance, now understand technology and now are applying it and creating business use cases.
All right, so I'm going to jump to this chart right here, John, and this, of course, is tokenized securities. Some of the big moves here, obviously, you see the average yield to maturity growing as well, but the interesting thing is just the growth. The Philippines recently had just announced $270 million in tokenized bonds, so we're starting to see that. And then, you know, when you look at just the monetary authority of Singapore and Project Guardian, I know you guys are doing a lot with many of these banks right now. When you look at that industry group right there, can you share others that you're working with outside of, say, Onyx, et cetera? Obviously, Citi, we've announced both of those. Anything else that you guys are brewing in terms of tokenized assets?
JP Morgan, Apollo, and Avalanche and all the other Avalabs for Avalanche with all the other players just mentioned is a fascinating thing what we're doing. Exactly is what's happening is it's creating a couple of things. It's tokenizing alternative assets and making it interoperable between different chains. In this case, it would be the Provenance HELOC, as well as some Wisdom Tree assets. And then Layer 0 connects that from Onyx to the Avalanche chain, so that what you're doing is, A, you're tokenizing alternative private assets, and B, you're making it interoperable between different chains. And why this is so significant, I think Christine Moy from Apollo said it the best. You're taking 3,000 operational steps and reducing it to one automated step. You're also going to decrease fees by 20%. And where the business use case can be really, really played out here, which I'm super excited about, is how it can be a increase alternative assets as a percentage of the allocation pool for private wealth managers. Part of the problem with alternatives right now is when allocators, whether it's endowments or individual wealth managers, they don't have the flexibility to increase their risk weighting or percentage in their portfolio of alternatives because they're illiquid. So when you do something like this, the hope is in the long run, you can rebalance your portfolios a lot easier, and you can create interfaces for the wealth managers to represent these alternatives to individuals who are obviously accredited or qualified or small family offices. So it's super exciting, actually.
Is there a way, or do you see a potential where some of these asset managers could circumvent some of these blockchains, such as Avalanche, or do you feel like you guys are in a really secure spot right now?
The subnet construct of Avalanche allows you to build basically a app chain on top of Avalanche. It's almost like a private blockchain. It has the sovereign security, but it also allows you to the composability and the flexibility to create the limiting requirements, whether they be compliance or the participants in the network. And therefore, Aval Labs, working with on top of Avalanche, can provide what they need from a technology solution either way, if they want a private or permissionless.
Okay, I like that because you're working on, depending on the particular entity of how they want to manage it, from a security standpoint, but
That's
also
correct.
from the tokenization.
But this exercise from JP Morgan, Apollo, Wisdom Tree, Avalanche, Layer 0, all these players, Figure and Provenance, highlights the fact that they are also thinking about interoperability between not just private chains, but someday also making it a little bit more open.
Yeah, I think that's the holy grail when you look of where the future truly lies around tokenized assets. Getting interoperability at that layer is going to be pretty significant. Here's another news piece right here. Republic's profit-sharing token on Avalanche now is going to pay investors VC dividends. So this is another big step in the right direction around this. Couple of points I wanted to highlight here. It's going to be paying dividends from proceeds of equity sales after all. That's pretty significant. And then, of course, they sold $30 million worth of the R note in a recent closed public sale, according to Durgy, which was tracking this. And once the asset's live on Avalanche, it's going to basically plan to have a secondary market for this, which is really where it gets exciting around that. When you look at what not only is happening with Republic, but obviously JP Morgan, Onyx, and you look at these subnets that are out there, will you be able to track this in the future? What's the capacity for that right now?
Absolutely. So Republic is great. They're a very successful venture firm now, and they do it in healthcare as well as Web3.
Right.
Tokenizing a fund or tokenizing some of these assets. Before even we get to your question, the benefits here are incredible. You mentioned earlier in that, and you highlighted in that piece, the dividends associated with or the distributions associated. Think about it, like anyone who's ever invested in private assets or funds, especially credit funds, are a pain in the neck. They realize everything from the subscription process to the distributions to the wire calls, all of that are very cumbersome manual process. Going back to the earlier quote, 3,000 steps to one automated, that distribution, when the whole thing is the business rules are encoded into the smart contract and on the chain, it makes it so much easier. and more efficient. It's effectively a better user experience for whoever is using it. That will increase engagement. So that may actually not just be helpful from a RegTech perspective, but it may encourage people to do more investing in alternative securities. I'd be remiss if I don't mention the other big partner that Avalabs has with, is Citibank. Citibank has created a solution on top of Avalanche with Avalabs' help. Basically, it is for bilateral foreign exchange trading. Typical ways this is done is doing request for quotes, RFQ. Now it's basically RFS, request for streaming. And the reason why this is important is because it really automates the pre-trade, the trade, and the post-trade process. So obviously the instant finality and better execution will unlock trapped money because settlements will go from 1 day to T plus 3 hours or even instantaneous 1 day. But a lot of the data will be now immutable on a chain, so there could be better post-trade analysis by participants in it. You will be able to effectively use the credit backing of the party to allow these trades to happen. So if it's a AAA type of, well-balanced sheet entity doing a foreign exchange with someone else, you don't actually have to put out the collateral, effectively call it escrow for the average person to think about it while you make these trades. So that you can rely on your credit quality, just like you would a score for your credit cards and how much you can borrow.
Yeah, for sure. If you guys did not know, those of you watching right now, is go back to some of our Avalanche videos. We did a full breakdown of the Citi partnership and why it was important within the Avalanche ecosystem. So it's a full breakdown. There's a full video on that over on the channel, so make sure and hit that. I want to lead over a little bit because last point before I leave the tokenized asset side is the idea of trading tokenized ETFs. And could that happen on something, say, like a Dexalot, which obviously is one of your test nets, I still believe, or maybe on Core? What is the potential there for going in that direction?
That's a great question. So I have two A and a B answer to that. So the question, if I may repeat, is can you tokenize ETFs?
Right.
Effectively. So a lot of that is actually happening already in some, or at least proof of concepts are happening at certain places that I know. I don't know if I can say the names yet. With that said, there's also active and passive ETFs. When you have active managed ETFs where you're constantly rebalancing and redoing things to the portfolio of that ETF, a tokenized version, just like it allows everything else to transact easier, that'll make that whole rebalancing again of the ETF much easier. So that's part A. I think part B of the ETF thing is, I think what ETF did to help revolutionize, call it basket investing, tokenization will help revolutionize the ETF construct going forward because it will be so much easier to do the active managed ETF. And that's one of the big trends existing that is happening right now in traditional finance, active managed ETFs.
TradFi, and you and I have talked about this so much. I remember our first interview probably 2.5 years ago, and we got into this whole scenario of the people, the companies, projects that were able to bridge the gap between Web 2 and where Web 3 truly happens. These are going to be the winners. I feel like Avalabs has really come a long way in being able to do that. Obviously, to go and leap to that next level, we're going to get into payments, loyalty, all that. I want to jump to that section now. And I want to hit on something that many of our viewers have probably seen us present a couple times. This was the chart that was done by Visa. Now, Visa's test was a variety of blockchains that were out there. Solana, of course, was right there at the top on their negative 0.4 seconds. And then you've got Avalanche right there on its heels in terms of the fastest blockchains capable of being able to run payment processing within the Visa infrastructure. So first of all, can Avalanche go faster? And what is the potential for what is there, especially when you look at major tests that are underway with companies like Visa?
You can go faster, and we're improving. Avalabs is improving the Avalanche blockchain every single day. I think those numbers relate to the main C chain, but if you create a subnetwork on top, it's already faster. So it can go faster if Visa want to have a call it their own app chain with the help from Ava Labs, we can create something for them that's already faster. But yet the main chain could also get faster.
So speed is no problem. Obviously, I'm looking here over on Avascan right now just to show you guys the quickness of which transactions are going through. Pretty impressive too, as we've continued to watch. I was looking at this right here, kind of stabilized. If you look at just November 19th, I don't know if you guys can see that up there is November 19th and 20th. And as you can see, these are the kind of transaction layers that are really starting to leap. Obviously, some of this we know why. John, I think this is a pretty good indicator right here of what the future of Avalanche is going to be. In terms of
the instant
TPS,
finality and the speed function has been incredible. And that's part of the reason why a lot of these traditional finance players want to experiment on Avalanche and use products on Avalanche.
The overall infrastructure of TradFi today, and we'll use credit card in there, we can use securities, you can use digital assets, and so many other things. I mean, the list goes on and on. What is the holy grail for TPS, do you think?
So there's a two-sided answer to that, okay? Some of the other fast networks out there are far more centralized. So you can always get faster if you centralize. What's amazing about the Avalanche blockchain, the consensus protocol there is it is as fast as it is, and it's one of the most decentralized, if not the most distributed out there. That's what's really impressive. And that's something to keep in mind. Now, with that said, what's the business use case? And does all finance need and all transactions and real world assets need to go that fast? The answer is no. Just like any technology and apply to a business use case, not every business use case needs instant finality. Payments, yes. If you're transacting large art, maybe you don't need it instantly.
Right. I was looking at the subnet right now. You can kind of see some of the growth here that has been happening with Avalanche. And, here recently we've seen some pretty significant spikes in total transactions. So again, just showing more benefits to it. If you guys aren't tracking the subnets over on Avalanche, I invite you to go, visit it. Just search subnets on the AVAX network. You'll find it. But this
not just the spikes in the subnets. What they're going to find in the next few months and quarter or two is an explosion of the number of subnets.
Yes. Yeah.
Super exciting time.
Well, look at the testnets, or on the testnet right now. There's a couple in here that, when you say explosion, obviously there's a lot that are currently underway right now. You see a lot of the traditional ones that maybe you guys will recognize within this. Who are these guys? What is this? I mean, you've got Shrapnel still obviously on there, but there's a lot that are unlisted. Are these the ones that you're talking about in terms of an explosive growth area?
The ones that are unlisted, I cannot tell you the name. It's purposely obfuscated for NDA purposes. So when I say explosion, not just these in the testnet, but there's a pipeline that will come into the testnet as well.
Okay.
Let's declare that up. But the ones that are unlisted are because of NDAs that we cannot disclose. But the ones we have disclosed, like Shrapnel and a lot of these gaming companies that we have disclosed, they are like AAA publishers. Shrapnel raised close to like 80 million to develop their game. And they're going to create a subnet on top of Avalanche to create more monetization for themselves of in-game assets and allow players to have a better experience with more creativity in terms of not just gameplay, but creation of assets, and as well as marketplaces of those assets.
So, all right, so let's talk about loyalty, because this, with payments and loyalty, they kind of go hand in hand. And if you look at, the potential transactions that loyalty platforms typically reside on, I would say maybe the food sector is one of the big ones. If you think about a Starbucks or a McDonald's, who have massive numbers of units, and then you times that by thousands of transactions daily and then figure that out, and now you start to see the scope of something like that. When you look at that, Avalanche, is it the perfect chain for that kind of activity around loyalty performance within brands? So
loyalty in the US, like Starbucks, is not as exciting, in my opinion, as loyalty in Asia. We're working with one of the largest conglomerates, SK, which split into SK Telco and SK Planet. On the SK Planet side, they have a loyalty rewards program. It's a loyalty program that is actually about 24 million Korean users, 40% of the population in Korea, and about 100,000 unique merchants. So the way their loyalty programs work over there is it's a pooled rewards point system. So if the Korean version of a Starbucks and you drank 1,000 cups of coffee, you can actually take those points and go to a hotel and use it for one night. The monetary systems of the loyalty points are controlled by Starbucks, are controlled by Marriott. They deflate those points. You need four nights to get one free night. Suddenly you find out when you get to the register, you actually need 8 nights to get one free night. There, when you have so many participants and exchanging information and value at the same time, that's when a blockchain technology setup is so much more efficient in terms of cost savings as well as utility. And then the user has a better experience. A business proposition there is effectively online business clustering. No different from why physical malls have a tentpole client, but then other smaller clients there, because it's good for Nordstrom's to have food courts. It's good for the food courts to have Nordstrom. So the same business clustering can be done online now through blockchain technology. What they have their own subnet, and if you go back to that, it was the UPTN subnet. You'll see on
this one right here
on that chart.
Yep.
And out of the 24 million, it's only been around like a month or two, and already 200,000 people have now migrated to the blockchain version of that. So that's 200,000 users, or call it monthly active users already in Avalanche in this UPTN subnet, doing things in loyalty related activity. And what they noticed was their user base of loyalty points in the traditional system, it's called OK Cash. The average age was getting up there, 40 plus years old. It's kind of like coupon clipping is usually an older person in the US. So what they've done is on this same app chain, they actually created 2 more applications all on their UPTN, subnet. One of them is event ticketing, using NFT contracts for event ticketing for this agency that deals with a lot of they call it Korean K-pop bands. So these are very, popular among the younger audiences. And then they've also done it for e-gaming team in Korea. That's also a very younger audience. It's a younger audience with a lot of passionate followers using in-game items and NFTs. And because it's on the blockchain construct and they can use a stable coin or a AVAX, they can now have a foreign exchange and allow these things to trade easily. And what they've done pragmatically is they've already started lowering the average age of the users in OK Cash for SK Planet. So that was a creative way of creating a business use case by leveraging the blockchain technology.
I mean, you guys have to be talking to all these brands out there right now. Are you seeing a light bulb starting to come on in the retail sector and in the big brands around loyalty?
Well, overseas, absolutely. And part of the reason why that's happening overseas is because the regulatory environment is far clearer in Asia.
Yep.
The example is PayPal. They try to do their own stable coin. And in the US, they get sued by the SEC. And Europe, they actually have received it's a license or something for the UK where they're allowed to do it. So,
under the UK,
the answer on the big brands is yes, but it's overseas. This is why I highlighted SK and some of these other brands. I think what the US guys doing, there are conversations happening. It's similar to the Project Guardian that we talked about earlier. They are creating sandboxes to do it in a tokenless or valueless token so they can understand the technologies and understand the potential business use case and the cost savings and the increased monetization they can get from more engagement. They're just waiting for regulatory clarity.
Let's jump over to gaming for a minute and remind me at the end of the video today, I want to just have a quick discussion with you after the show, because we have a big idea for you that we want to pitch to you. So it's a reference that we think is a good match for Avalanche. But anyway, I want to go over to a clip. This was a clip of, guess who? John Woo. Listen in.
What does the future look like for Roblox?
Because what you'll see is more similar to what a Web3 crypto ecosystem is like. So it's 2/3 of the way there, but it's not really Web3. And in 10 years, I see it moving more and more towards that.
I kind of feel like Roblox is its own walled garden. Is there any chance or any thinking on some kind of interoperability between all that stuff?
Yeah, I think there's two types of interoperability. One would just be on valuable items like a pair of shoes from Nike and whether the NFT supports the interchange.
There's a bit of a dream here about objects and NFTs moving from platform to platform. Someday Elton John may come on Roblox and make 8 or 10, and we would imagine someday that those would go off platform as an NFT, possibly get sold off platform, and then come back on platform.
Is there a way to get infinite Robux?
More shares, less value. And so that's probably the reason why we can't give out infinite Robux. Everything our developers do would probably reduce by a factor of 100.
All right, so John, you pretty much called it right there. You did the interview, then the CEO of Roblox comes out and starts to slowly and gradually realize, all right, the future is here now, and we see this in the roadmap going forward of potential NFTs.
Roblox has been around for 12, 13 years.
Exactly, yeah.
And what I saw in Roblox is, sure, they're in a centralized environment, but Web3 is not just the open blockchain technology itself, but it's the mindset and willingness to embrace an ethos. And the Roblox ethos was very much about composability. Creators and users could be in the same person. And then they have a coin, Robux. And that coin is no different from a token that allows young creators to go and create things on top of other things. So the issue is part of the reason why they've been around for 10 plus years is because they had to create this all themselves.
Yeah.
What you will have, and what a lot of great gaming companies now are experimenting on, especially with Avalanche and Avalanche, is the composability of the permissionless code so that you go to market a lot faster. Code exists, you can build on top of it. If you're a creator, if you're a user, if you're a player, you can suddenly have it do it yourself, kind of like what Wix did for creating websites, and all of a sudden drag and click and create your own maps, your own games, your own assets, and allow a marketplace that others come in and play. Roblox is closed, so but other games, what they have is a lot of black market trading of in-game assets. Literally, one player will go to a black market marketplace and agree with another person to swap or pay for this thing. I'll give you half the dollars for this, the shield. And when we go back into the game and we add the transaction, I'll pay you the other half. That is a very clunky way to do in-game asset trading or items. Web3, blockchains, a subnet on Avalanche is exactly what a lot of these games like Shrapnel, Gunzilla, all AAA type publishers are creating in order to make that much more of a seamless transaction, reduce the friction. It's better for the user, and it's better for them in terms of monetizing it, because the black market trading, they get nothing in terms of the exchange.
A year ago, everybody was still pushing against it. I think now we're starting to see a lot of the game leaders in the industry start to realize what the real future is and what the capacity is, for sure. So interesting. I want to jump over. You mentioned Godzilla.
I think a year or two ago, it was about the play to earn games. The gaming wasn't that great. It was all about play to earn. Now, I don't think those play to earn games can be, a long business model, but they did serve a purpose. What they did was show AAA publishers the seamlessness of trading items and how easy using the blockchain rails can be effective in terms of moving information and money at the same time.
I'm showing off the grid here, but also, obviously its relationship with Gunzilla. But what do you think will be the first to market in terms of a console delivery? Where do you think that's going today, right now?
A console delivery using blockchain as a solution to help enhance the business use case. Is that what you mean?
Well, not only that, but maybe the first real Web3 game to make and crack into console gaming.
I think we're working with two of them that have real potential. The gameplay has to be really good. Unlike the play to earn, which is more about, GameFi, the gameplay has to be really good. And it costs a lot of money to create a great game. It's like a movie studio. I mean, we're talking about $50 to $100 million if you have a shot at creating great gameplay in today's, game world, if you will. Both Gonzilla and both Shrapnel are experienced AAA publishing creator houses that are creating games. And in Shrapnel's case, they have actually literally raised, I think, close to $80 million for creating this game. So if it's going to happen, I'm very excited for it to happen, and it probably will happen on Avalanche.
I want to get into NFTs a minute. AVAX NFTs exploding right here on Hyperspace. Obviously, some of the movement we've been tracking. We put out a tweet, I think it was yesterday, right there, and it was the NFT sales volume. This is very new for Avalanche in the essence of a marketplace, but the point is that Avalanche is growing like crazy on growth here. So when you look at that, seems to be in the right position at the right time. Can you talk to maybe the strategies of how you guys are going about this?
The loyalty as well as the gaming, they all require some sort of NFT. So the natural next segue was to get into the NFT market. We have a great person who's been working on that area. Dokio is one of the star artists in the space, and he's responsible. He showed some of his art earlier just now. And he's well known in the space. So that's part of it. Having a great marketplace like Hyperspace, you mentioned Hyperspace, these are all part of it. So not only was it the right time for us to experiment more earnestly with NFTs, but it's this native market in crypto that's going to give us the learning that we will need in order to provide better loyalty points, to create better identity. We're working on, at Avalanche, working on what we call NTTs. It's a non-fungible identity item. So you can have your own identity and you're the only one that owns it. It's unique to yourself. So this is a great learning ground, not just also because it's great for crypto native people who are energized by crypto native art and digital collectibles, but while we do this, we will be able to, Avalanche will help provide better solutions on Avalanche for traditional Web2 companies that are commerce related or that are compliance related if it's PII information.
John, there's been a recent, I'll call it kind of a great migration starting to occur. Some games jumping onto new chains. This seems to be happening more and more. And in many cases, it's how early developers are, maybe they start with one chain, they realize there's some limitations, then they decide, all right, we made it through the kind of the testing and our proof of concept phase. Now we're ready for the big leagues, and they're looking at jumping onto projects and blockchains like Avalanche. I mean, do you feel that this is going to continue to be a trend going forward until we really see this mass migration kind of finalize in this next bull run in terms of gaming?
Well, we all believe in a multi-chain world ultimately, and basically, if you need to create liquidity, whether it's a financial marketplace or an NFT marketplace, they will happen in different chains, different places. And this is going back to the interoperability argument we were talking about, or debate we had earlier. Creating interoperability and allowing the liquidity to move around or be fungible with each other from different chains, that is inevitable. This is what Web3 is about. Web3 is self-sovereignty. You own your identity, you own your own assets. And if you move around, then you can move around. And therefore that creates more liquidity. Pooling liquidity is also always better than, individual liquidity. I mean, take the analog from traditional exchanges in stocks. I mean, when I was growing up, there was a Pacific Exchange, this exchange, a Midwest Exchange, a Miami Exchange, a New York Stock Exchange. Somehow there's just New York Stock Exchange and NASDAQ now. Pooling liquidity is always the answer.
I want to get into the point of interoperability. This was a clip that we pulled on Meta and Zuckerberg. Listen in.
The more that there's interoperability between different services and the more content can flow, the better all the services can be. We can also start to support more interop, which I think is going to be
with other
interesting
services
too.
like Meta that Meta doesn't own, other messaging.
Yeah,
apps.
well, I mean, the plan was always to start with the interop that between our services, but then to get to that. But yeah, we're starting to experiment with that too. I just don't think that people like feeling locked into a system.
Yeah.
Meta has seemed to kind of see the light, and that interoperability is kind of underway here, and especially from the biggest minds, in the industry. What are your thoughts on that? More to follow?
I mean, I hope there's more to follow than just saying the words. I mean, he still has about 3 billion Facebook users between Facebook, Instagram, and WhatsApp that can't just literally take their social identity and move it to a different place. The world has been, and this is part of the reason why I am in Web3. I believe in open innovation. And what's happened in the world is far too much centralization. There's 5 to 7 companies in California or Seattle that basically own and know everything about us. Everyone is, knowing or unknowingly, has traded off a lot of their privacy for that efficiency that's been created. And to me, that is not clear that it's good for entrepreneurialism and ultimately in the long run, good innovation. I think, especially now that we're in the world of AI, my biggest fear is that AI is not, there's ways to develop AI, the open innovation style, open source technology, open data, open algorithms, or doing it in a closed environment. If you do it in a closed environment, you're just going to benefit the existing large players because they have more data and they have more cash in order to test out algos and test for inferences, et cetera, and pay for the massive compute power you need to actually do all that. So we are going to further push away entrepreneurialism, the young startup, and also choice.
One of the things we hit on quite some time ago was that Avalanche would be most likely one of the top game, potential destinations. We put out a tweet. We're playing with the guys over at XCAD. The point is that we're seeing some of these chains start to dwindle in both popularity, but also in the future roadmap opportunity. So the likelihood is there's some really good projects that need a new home here, John. So we were kind of pitching, hey, Avalanche has got some things going on over here. I think they have open arms. We'll see.
We have open arms, and it's funny you say that because we do have a lot of inbound from great applications, great developers, creative artists who are doing it elsewhere, but wherever they're doing it is shrinking. So they're looking to deploy
we won't say any names
on Avalanche.
Yeah, after what's happened in the news. I want to jump over to this last before we get over to roadmap. And obviously this is Apple facing a class action lawsuit now, really alleging the competitive practices on their point-to-point payment market. And there appears to be maybe some conspiracy here within the tech giant. So has Apple, are they finally in for a reckoning of the closed ecosystem that is the App Store? What is your thought on that?
I'm not a reg policy type guy, but I do know that if it weren't for antitrust, Apple would be a payment rail already. And they would just own even more about us.
For sure. Last up on roadmap, okay. I'm looking at your testnet right now. You've got, of course, many of the people have heard us talk about Beam. I'll kind of zoom in on that a little bit. Many of us already have talked, probably, if you're not aware, we've talked about maybe Dex a little bit. I mean, what's next on this in terms of potentials that could go live into the Avalanche subnet soon? What are your, going to give us anything?
So Beam is actually the testnet for Merit Circle. And what that is where I'm super excited about that as well. It's not just, what we talked about is gaming and individual IP, specific games before, Gonzilla, Stripe, no. But a Merit Circle is a contract that kind of doesn't exist in Web 2. The best way to explain it is like a publisher house, like an Activision or a Take-Two, with a Unity, which is the tools associated with it to allow creators and publishers of games to work together with an incubator and a funding mechanism. So these are ecosystems for gaming, and And this is actually where a subnet, it really can really take advantage of the power of the blockchain for Merit Circle and other ecosystem type players, because then you have 10 games and you allow in-game items to trade between different games.
Do you see a lot of businesses starting to think like that yet, of really understanding what the capacity is?
Yes, they're thinking, for example, how do I increase engagement? That will lead to increased monetization. What can I do in the blockchain technology construct that I can't do in Web 2? Mm-hmm. So it's not just about the cost efficiencies of the workflow automation of a distributed ledger, or the unlocking of trapped money in instant finality and decreasing settlement times, but it is how do I make this a proactive increase of AUM or increase of engagement with increased monetization per wallet type of analysis now. So they are literally experimenting for business use now and optimizing them on a blockchain.
But the next 18 months through this next run into 2025, what's it going to look like for Ava Labs and Avalanche as a whole?
So I'll break the roadmap between technological roadmap as well as partnership roadmap. On a technology perspective, obviously every day Ava Labs continues to help the foundation of Avalanche out and increase the productivity or the ability of the chain to continue to do better and better and better, faster, more scalable, all of that. But specific things that I'm personally very, very interested in is the ability. There's a thing where we call AWM and Teleporter. Effectively, for the average person who doesn't know exactly the details and hasn't completely gone through all of the deep dive yet, it is a way to exchange messaging and assets through subnets much faster. So the connectivity between value and information with all of these subnets that are coming up in the ecosystem will improve tremendously. That will unlock a lot of new business use cases. And going back to your clip on Mark Zuckerberg, that'll be interoperability of services that maybe someone else is working on that your blockchain or your app chain doesn't have. And suddenly things become far more composable and fungible. Other things we're doing in terms of technology, I think relate to storage. There's going to be ways to have more storage on chain. Those are all things that, to the average user may not be as exciting, but in the partnership side, they will see all these games. They will see a real AAA game taking advantage of the blockchain technology. In terms of traditional finance, they will be able to see more and more of these partnerships that, unfortunately, especially with finance, we cannot, they're under NDA, cannot explain. And suddenly you'll see, one of my predictions is in 2024, you'll have as much settled on blockchains in terms of stable coins as you have in both Visa and MasterCard. I don't know if people realize that, but last year, according to Brevin Howard, there was as much on-chain settlement of stable coins as there was almost as much as on the Visa network. And I believe in 2024, it will be more than that. And then we talked about loyalty points, commerce opportunities. A lot of these Asia companies are leading the way, but the US brands are watching with a very, very careful eye and trying to figure out how to create increased business use cases as well. So that's what I'm super excited about, the roadmap for
John,
those types of activity.
What about decentralized compute when you look at, the now, I think, emerging market of AI? Obviously, we've seen everything from what's happening over on the Render network with, within the Solana blockchain. What about decentralized compute, and especially addressing the challenge that AI is representing, which is where we need all of this power? Anything planned for Avalanche there?
We are talking with some startups who are trying to address those decentralized compute. It is frankly early from integrating a blockchain solution for that. Where AI is helping or is helpful for blockchain is allowing coders to have better security analysis, to make it easier to code, automate the coding better. So the use cases of AI on blockchain are starting to happen. Developers who believe in an open system and transparency, so they want the data and want the track record, the models on a blockchain. So we're working with those players as well.
So much going on out there. I mean, it feels like we are at the birth of another internet era. I think we talk about Web3 is the next internet. So it's fun to talk to innovators like you guys for sure. John, thanks so much for coming on today. We really appreciate it.
Always a pleasure. Thank you, Paul.
You bet. Hey, make sure and stick around. I want to show you one thing before we cut you off. But anyway, I'm going to wrap up here. Everyone, if you guys are not maybe tuned in here to the YouTube channel, you just missed a whole ton. So come over from the podcast, jump over to the YouTube channel, and hit subscribe and like this video because it's going to help others learn a lot more of where not only Web3 is going, but a lot more about what Avalanche is doing. So dive in deep. If you're not in our Diamond Circle, it's a real great place to go for additional content. We do a couple of podcasts over there. You guys can also catch me out there on X at Paul Barron. We'll catch you next time right here on TechPath.